Welcome back. And in our top business story, the Dubai Chamber and Southern Gujarat Chambers have signed a memorandum of understanding to explore mutual investment opportunities. The Dubai Chamber trade mission to Surat concluded on a positive note, where investment opportunities into diamonds and textiles were discussed. His Excellency Abdul Rahman Saif Al Ghurair, the chairman of Dubai Chamber, led the delegation of 11 Dubai businessmen and signed the MOU with His Excellency Rohit Mehta, the president of the Southern Gujarat Chamber of Commerce and Industry. Surat, the global diamond capital, ranks as the fourth fastest developing city in the world, and India is the topmost trading partner of Dubai. The UAE's direct investments in India were estimated at about $1.9 billion for the period 2000 to 2011, and Dubai imported 48.9 billion dirhams worth of diamonds in the first 9 months of 2011. The agreement sets the framework for the development of joint ventures and technology transfers and investment, as well as the exchange of trade inquiries and delegations. Dubai's office market has seen a boost in supply, putting the current vacancy rate for properties at 48%, according to the latest report from property firm Knight Frank. It stated that tenants are benefiting and taking advantage of oversupply, and many are seen consolidating operations along with upgrades into better quality accommodation, a trend that they anticipate will continue through 2012. Demand will focus on the best located and specified buildings in the city and free zone areas, as more businesses set up shop in the Emirate to tap into the Middle East market.
We do expect to see the office vacancy rates for the best-in-class accommodation in the best areas stabilise, and we've witnessed that more recently, and actually see availability fall. We've certainly seen rents stabilise for the best, and we don't expect to see any movement upwards in those rents yet, but we do expect to see availability in the best locations begin to fall. However, the wider market, Dubai overall, is still going to witness considerable amounts of other accommodation or new accommodation come online that we would regard as not prime, as not best in class. So that will distort the overall headline figures, which will highlight availability probably upwards of 50%. And going forward, certainly towards the back end of this year, perhaps early into next year, touching maybe 60%.
13 UAE companies have made it onto the Forbes Global 2000 list, a list of the top 2,000 global companies ranked according to their sales, profits, assets and market value. The total 13 UAE companies on the list have a total market value of $79 billion and total assets at $419.2 billion and a combined profit of $7.8 billion for 2011. Etisalat led the UAE listings at the number 509 spot with a market value of $20 billion. The telecom operator was then followed by National Bank of Abu Dhabi at number 772 with $9.5 billion in market value. Then First Gulf Bank at number 852 is next with $8.1 billion and Emirates MBD at number 1034 with $4.8 billion. America leads the list both in terms of top 3 companies, ExxonMobil, JPM Morgan Chase and General Electric, as well as the overall number of companies in the top 2,000. 524 firms with a combined market value of $13.3 trillion. And Japan has the second largest share of companies on the list, followed by China. And First Gulf Bank PJSC has announced that it witnessed yet another successful quarter for the period of Q1 2012. The bank stated that it recorded a net profit of 935 million dirhams, a 7% increase compared to the same period in 2011. And Etisalat has reported a group profit of 3.4 billion dirhams and a net profit after government royalty at 1.8 billion for the first quarter. So with that, let's now take a look at the stock indices across the GCC.